Hey guys, James here with Water for Business Solutions. And for contractors, a big thing that, well, it's pretty much always going to be needed is going to be vehicles, whether it be sales trucks, service vans, box trucks, dump trucks, depending on the trade. There's always going to be a need for vehicles because you're going to have to have some type of way to get to the jobs. You're in the home services industry, so you've got to travel to the customer's location to provide the service to them at their house, at their business, at their condo, wherever it may be. You've got to physically travel to them, which means there's always going to be a need for physical vehicles. And when it comes to vehicles, there's two different ways that we can acquire them: leasing them or buying them. And so in today's video, we wanted to talk about kind of what are the financial and accounting differences that we need to consider when looking at acquiring a vehicle. Acquiring a vehicle is always going to take some type of capital and also some type of plan to afford and plan to pay for said vehicle. So it's always important to understand your finances before you jump into acquiring any type of new vehicle to make sure that there's not just a physical need for the vehicle, but the financial capacity to attain and afford that vehicle. If you don't have an understanding of your finances, or you don't have an understanding of if you could afford acquiring a vehicle, we're happy to help you out. That's why we are here at Waterford, is to help our clients not just get their books done, get their taxes done, but physically understand their finances. Give us a call today at 864-351-0852 or shoot us an email at info@waterfordbusiness.com so that we can help you go ahead and plan for the asset acquisitions, the vehicle acquisitions, the growth and the labor that you need for your vehicles or for your business in general. We're happy to help that out there, and we always like to provide a free initial consultation for our clientele there. Now, like I said, you've got two main different ways to acquire a vehicle. You could either lease a vehicle or you could purchase a vehicle. There's pros and cons in both directions. The ultimate pro with buying a vehicle is once you buy that vehicle is yours. You may have a loan on it. It could last for 3 years, 5 years, 7 years, depending on however long you choose to do that loan. But after the point of that loan, once that vehicle is paid off, that vehicle is paid off. You are covered, you are taken care of. That's your vehicle outright, and you can continue running that vehicle into the ground until it literally can't do anything else. I've got clients that are running Ford Ecoline vans and Chevy vans or GMC vans from 2002 and 2007 that they're still running, they're still working. And they don't have any loans on it. They aren't paying any. There's no cash outlay on it. They own those vehicles outright. The only cost is going to be the gas and the maintenance on those vehicles there. So that's a great benefit to owning or buying a vehicle outright. You're also going to, depending on what you do there, you're probably going to get a better interest rate on buying a vehicle depending on who you are, because a lot of times if you're buying new, the manufacturers will run incentives or specials on bought down interest rates, or you can go to like a local credit union if you've got a relationship with them and get a much lower rate on financing that vehicle than you would if you were to lease that vehicle. The vehicle is also yours, so whatever modifications you want to make, upfitting the back of the van, adding in a bunch of stuff, whatever it may be, do it, because at the end of the loan, at the end of the financing period, you're just going to hold on to that vehicle and it's not going to be an issue there. So buying a vehicle is great for companies that are looking to long-term hold on to a vehicle. You're going to hold that vehicle for more than just the finance period. You're not only going to hold on to it for 3 to 5 years, you're going to hold on to it for 5, 10, 15 years. It's great there for acquiring vehicles. With a vehicle, when it comes to taxes, if you were to buy the vehicle, you're going to end up depreciating that vehicle. Now, depreciation is always kind of variable. This could always change. Currently, as of the recording of this video here, kind of in the middle of June of 2025, you've got kind of 3 different options you can do with depreciating a vehicle. You could either buy a $50,000 vehicle and depreciate it over 5 years, either with straight line where you divide the price out over 5 years, or diminishing value where you take a decent percent in the first year, a larger percent in the second year, smaller percent in the third, smaller in the fourth, and smallest in the fifth, and it's fully depleted. That's going to be a diminishing value depreciation. A straight line is just take the $50,000, depreciate $10,000 a year, and that's straight line depreciation. You're going to have that easy standard there. You can also do Section 179 if the vehicle that you're acquiring is over 6,000 gross tons. And there's a lot of back-end stuff there. We're not going to dig into pros and cons of Section 179. That's not what this video is for. But Section 179 allows you to accelerate some of that purchase price of the vehicle. Not all of it, but some of it. The other thing you could do is bonus or special depreciation. Again, as of the recording of this video, that's sitting at a 40% value. So in the first year, you can depreciate 40%. And then the remaining amount, you could go ahead and depreciate the standard 5-year diminishing value depreciation schedule. That's going to be for the 2025 tax year. So when you're filing your taxes here in March, April of 2026, that's where that 40% applies. Please keep in mind, taxes are always changing, so this could change here. That's going to be pro-con of buying a vehicle is you're not taking the payments or anything like that as a write-off or anything there. You are losing value on the van, and that value loss on the van is what you are taking as a write-off. Now, cons on buying a vehicle. Well, my guys that are running vehicles from 2002, 2007, even early 2010s, they have much higher gas prices because the vehicle's engines are nowhere near as efficient as modern engines or anything like that. The cars are also going to have much higher maintenance. They've got more mileage. They're going to require more maintenance. So it costs more to keep those vehicles on the road a lot of times than a vehicle from 2015, 2020, or even a brand new 2025 vehicle. So while you may not be paying out cash or paying out money to pay off a loan or to buy a vehicle, you are paying off cash to run the vehicle there. So that's one thing to keep in mind. That's going to be kind of the biggest drawback to buying a vehicle that you've got to think about. The other thing is going to be if that vehicle gets damaged, if that vehicle gets crashed, if that vehicle gets totaled, you've got to go and you've got to buy a new vehicle. You'd have to do the same thing with a lease, but now you've got to go through insurance claim processes and everything else here. So buying a vehicle, there's nothing wrong with it. If you want to own a vehicle for a long time, you're okay with not having the most fuel efficient, most updated look, you don't have the most updated vehicles, you're fine with that. You know that you're going to spend a little bit more on maintenance, that's perfectly fine. Buying a vehicle is great. Long term, it can save you a lot of money to buy vehicles. However, we could also go the route of leasing a vehicle. When you choose to lease a vehicle, you are agreeing that over a period of so many years, 1, 2, 3, maybe up to 5 years, it's rare that I see a commercial lease go up to 5 years, that you're going to drive the vehicle and then you're going to turn it back in. Now, typically with a commercial lease or with any lease, you're going to have to name how many miles you are going to be driving it in a given year. So you have to think through that. You have to work through that there and make sure that you are accurately doing everything and accurately figuring out how much mileage you are going to end up needing so that you don't have a ton of additional expenses there or a huge lease trade in there. A lot of people get screwed up by that, so it's important that you make sure that you have an accurate idea of the mileage that you need. The benefit with this is going to be, yes, you're going to be paying every single month on that vehicle, and at the end of 3 years, you've got to turn the vehicle in, and you're going to continue paying again because you're going to get a new vehicle for 3 years. So you're constantly paying on these vehicles. That's always going to be happening, but you're going to have generally the most up to date. You're going to have the most fuel efficient. You're going to have the newest technology. You're going to theoretically have better maintenance schedules, less expensive maintenance or anything there. And ultimately, if you get a vehicle or a brand that you don't really like or anything there, you only have it for 2-3 years, and then you can back out of it and be done with it. If you figure out, hey, this setup works better for me for the upfit than this setup, after the 2-3 years, you're trading that vehicle in and you're getting a new vehicle, and you can trade that out. So it's giving you flexibility to change that you don't get when you're purchasing a vehicle. From a tax perspective, you're going to end up expensing those lease payments as you have those payments. So you don't get depreciation this time, but whatever you're paying to lease that vehicle, you are going to take as a deduction on your taxes. So a lot of pros there. If you like having the newest, the best, most fuel efficient, if you like the ability to change things up, change brands up, change models up, change setups up, buying or leasing a vehicle is going to be really good there. Now, as a counter to that, you're constantly paying out money. You're always going to have the cash outflow of these new vehicles. You're always going to be paying these lease payments. You're never going to end that like you would with a loan. So a lot of people don't like that. You're also going to, every 3 years, you're going to have to pay to wrap a new vehicle and unwrap an old vehicle. So anything and everything like that, you're going to have additional costs there. You're going to have additional costs on upfits. Sure, you might upfit the vehicle, it'll work for you, go through, everything will be fine, and then you will trade it in or take it back and then get a new one, but now you got to go through that whole upfit situation again. And while they can wrap that into the lease, that is technically kind of money that you're losing there at the end. So it generally will be more expensive to lease, and you've also got to make sure that you are very specific on your maintenance and everything for the mileage and everything. So if you get that mileage wrong, it can be very, very costly to buy mileage at the end of the lease than if you were to pay for it up front. So that's also a big important thing. However, because you've got newer vehicles, typically your insurance is going to be less. Because you've got newer vehicles, because you've got a lease, if you end up in an accident or a wreck and it gets totaled, there's usually gap insurance included in the lease to cover whatever differences there are, and the vehicle's gone. You no longer have to pay anything for it. Insurance pays out. You go, you get a new vehicle, bada bing, bada boom, you're done. And it works really cleanly, really easily there. So it's a great way to keep a modern look, a fresh look, a clean look, as long as you're willing to pay the additional money there that you're likely going to outlay. I've never seen a company have a lower expense or a lower cash outlay by leasing vehicles than by buying vehicles. That's just never going to be the case, because while there are more expenses on older vehicles, you get rid of that cash outlay of paying down the loan and everything there. So that's going to be important to think about and keep in mind. And for anyone who is adverse to debt or anything like that, leasing is never going to work, because you're always theoretically in debt. You never own that asset. You can never just not have a payment by leasing a vehicle. Whereas you can take a loan out and you can pay that loan down quicker and then be out of debt quicker than what the initial loan term was for. So it really depends on the company and it depends on the person as to whether a lease versus a buy makes sense. It is important, though, with leases, if you're going to go into a dealership, make sure that you ask them about the money factor of the lease to compare what the interest rate on a lease is compared to the interest rate on a loan. Sometimes there will be incentivized money factors, because the money factor, what that is basically the interest rate you're paying on a lease. So it's always important, if you're kind of in between which option is best for you and you think either one can kind of work for you, check on that money factor. Which one has a better benefit there for you if you're on the edge there of which way you want to go? As always, guys, thanks for joining me. Hopefully this video helped you out. If it did, I encourage you to check out other videos on our YouTube channel here. Leave a comment, share this with anyone that you think could utilize this information, and also go ahead and like and subscribe to our channel, because every Monday we put out more information just like this or other things to help you master and understand your finances and your business's finances. Until next week, have a wonderful rest of your day.